I got a pleasant surprise in the mail yesterday. It's Ray Dalio's brand new book, Principles. Now, this is different than the old PDF that's gone around for years, which I believe is also called Principles. But this is a full-fledged book with tons of details and a lot more information in it. And it's really about life and business and whatnot. And later he's going to come out with a book about economics and investing. But there's one thing that he talks about in this book, and it's about really being open-minded, okay? And the parallels to trading are just huge. So I took a couple points and wanted to share them with you and from my notes and what I thought about this. So closed-minded people don't want their ideas challenged. Open-minded people are not angry when someone disagrees with them, okay? Think about trading. Think about a trader that has an open position. The bad ones, the not high-level professional ones, don't want their ideas challenged by the markets themselves. Okay? Open-minded people are not angry when the market disagrees with their position. Okay? So let's really apply it straight to markets themselves. Another way you can apply it is to other traders around you. Perhaps that's online if you're trading from home. Perhaps that's on the desk if you're on a desk like we are. Other traders may disagree with your position. Stay open-minded and open to that information. You don't necessarily have to use it, but soak it in, absorb it. It'll make you better. Closed-minded people are more likely to make statements than ask questions. Open-minded people genuinely believe they could be wrong. Okay? This is huge in trading. In fact, you know, that first line resonates with me. I feel like a lot of times I make statements where I could be a little smarter about it and ask more questions and really grow even more. So that's something that I'm personally working on. You know, this super closely applies to the potential outcome of a trade. Okay? Do you genuinely believe that when you get into a trade that you could be wrong? It's easy for you to watch this video on your iPad at night and say, yeah, you know, I know when I take a trade I could be wrong. Merritt's wasting my time here. It's one thing to admit that rationally from a calm place right now, but when you're in the heat of the moment, when you're really in a trade, are you genuinely open-minded that you could be wrong? And have you planned for that in advance? Okay? Huge deal. I work with guys, I see this all the time. It's a big deal. Work on that. Closed-minded people focus much more on being understood rather than understanding others. Open-minded people always feel compelled to see things through others' eyes. I think most of us could do a better job with this in life, in trading, in general. But focusing on trading here, you know, are you forcing your ideas onto the market? Are you actually staying open to hear what the market's really saying to you? You know, that age-old example of you're fighting a trend day, the market keeps going higher and higher, and you're shorting, and then after things calm down and you do your review at the end of the day, you feel like an idiot, right? What was I thinking? How could I have been so dumb here and continue to fight this? Well, you weren't open-minded enough to truly be objective and listen to what the market was telling you at any given point in time. Okay? So being open-minded can really help us as traders. Closed-minded people lack a deep sense of humility. Open-minded people approach everything with the deep-seated fear that they may be wrong. Okay, just a little more of the same, more of these similar concepts here around these open-minded versus closed-minded. Recognize that decision-making is a two-step process. First, take in all the relevant information, then decide. Okay, so to apply this to trading, it may sound common sense when you first hear that, but let's say it again. Recognize decision-making is a two-step process. First, take in all the relevant information, then decide. How many of you sitting at home are taking whim trades, revenge trades, impulsive trades without really thinking about the variables first and then deciding what action to take, whether that's no action or one of the trading actions we could actually do. What does that all come down to? You've heard me talk about it before. Process. Do you have a process in place for, one, taking in the relevant information for you? Have you decided what information is relevant to make a trade decision for you? And then two, then making a decision once you've gone through that actual process. So tons of lessons to be learned. I'm still going through this book, but really enjoying it and just wanted to share with you guys.